Hey folks, Kevin Mullen with Mullen Associates here again. I want to talk about the Qualified Business Income Deduction today. So strap in because this is actually super important if you're a business owner or have recently started your own business. The SBA specifically announced here a couple of months back that we had a record number of people entering the kind of independent contractor sphere or people who are starting their own business. So there's a lot of you out there that are in a position that you've either started your own business or have been running your own business for years or are looking to potentially get into that. The Qualified Business Income Deduction was included in the Tax Cuts and Jobs Act legislation that was passed on December the 15th of 2017. It's crucially important that you have a baseline understanding of this. So first, what I'd like to talk about is what is QBI. So we colloquially refer to it as QBI, Qualified Business Income Deduction. The QBI deduction is a deduction that is essentially, it's the best kind of deduction, okay? It is a deduction that is provided to you as a business owner simply for having profit. Now, let me expound on that a little bit because the QBI deduction doesn't actually represent a tax credit, though you might think of it like that. And it really doesn't represent something that you've purchased or that has cost you money in any way. This is the type of deduction that exists because you have profit. So if you have $10,000 of profit, you could potentially qualify for a $2,000 deduction, the QBI deduction. It's the best kind of deduction ever, and it incentivizes higher profit. The more profit you have, potentially, the more of this deduction you can qualify for. Now, how do you qualify and who qualifies? Essentially, the Qualified Business Income Deduction is dependent on just a few factors. Factor number one is that you have to have qualifying business income. Now, that calculation I'm not going to go too much into. Suffice it to say, if you are an owner of an S corporation or a partnership, or if you are an independent contractor or a sole proprietor in some form or fashion, it is extremely likely that you have qualifying business income. Now, who qualifies is a little different. This is primarily based on an income threshold. So if you have even a little bit of qualifying business income and have essentially adjusted gross income under the certain thresholds, so for a single filer, I think it's about $164,000, and I think for a married filer, it's $329,000. I think that's the jump-off point, okay? And then it's about $20,000 to $40,000 above that is a range in which it, you could say, graduates or phases out. Meaning at $328,000 of adjusted gross income as a married filer, you would qualify for the entire 20% qualified business income deduction. Again, if you qualified, which I'm not going to go too in depth on that. But at that income threshold, you would qualify for essentially the entire 20%. As your income goes above that 329, then essentially there is a portion, a prorated portion of that which you qualify for. So if you're under these thresholds, then you potentially qualify for this deduction if you have qualifying business income. The only other thing I will say is there are certain trades or businesses that do not qualify under this, but many trades and businesses do. So if you want to figure out if your industry qualifies, reach out and contact one of our competent tax advisors, and they can enlighten that area for you. Now, so you have a basic understanding of what QBI is, and you have a basic understanding of who qualifies depending on income thresholds. There's one piece here that we need to cover, and that is what if? What if I am over that income threshold and I own my own corporation? How can I still qualify? Because there actually is a way. You can't qualify just because you have profit anymore, but you can qualify if you have certain employee wages that you pay, or based on unadjusted basis of assets that the company, depreciable assets that the company owns. So there are actually two other methods that you may qualify for QBI, even if you're over these income thresholds that I spoke about. Okay, remember, about 164 for a single individual and about 329 for a married couple. So if you're over those thresholds, you actually still could qualify potentially for the QBI deduction, but you need to make sure that you're approaching your tax planning really intelligently. So let me give you a common example. I have a business owner, a hypothetical business owner who is my client, who I'm advising in regards to what their adjusted gross income is versus what those wages paid are. This is super, super common. I do a lot of these consultations in November and December every year because essentially there's a quantifiably right answer. Let's say, for example, that my client has, $600,000 in adjusted gross income. They don't qualify for the QBI deduction based on the income threshold. They don't qualify, but they do pay some employees a wage. Because of that, a portion of that unlocks the qualified business income deduction. But what if we determine that how much wages that they had paid over the course of the year to their 1 or 2 employees in their business, or 5, wasn't enough to unlock the full benefit of the qualified business income deduction? Then I might advise my client to take and run an extra payroll for them to pay themselves the amount necessary to unlock more of that QBI deduction. Now, it's important to note, you business owners out there, when you pay yourselves, remember, you're paying more in payroll taxes, such as Social Security and Medicare taxes, as well as federal and state unemployment. But the QBI deduction represents 20%. Payroll taxes only represent approximately 15 to 16%. So even if you're paying more in payroll taxes, you can benefit more from the QBI deduction than the tax you're paying on the payroll. It gets more money into your personal account, which can be funded back into the business if you want or enjoy it personally, as well as you paying more into the Social Security fund, essentially, for you to benefit in the long run. So there really is only upside here, even though there's extra complexity. Depending on how much you pay yourself, you may even already be meeting the Social Security cap. And now it's hugely beneficial because now we're comparing the 20% QBI deduction to about 3 or 4% in payroll taxes. And now it makes a tremendous amount of sense for you to pay yourself more to unlock more of this deduction. Without fail, almost every business owner I ask, are you aware of the qualified business income deduction? Their answer to me is no. And then I will show them on a copy of their previous tax return where that qualified business income deduction is. Because first they'll think, what did I miss, right? Am I missing a huge deduction? How could I possibly have missed this after I go about explaining it? And I explained to them, no, you very likely had it on your tax return. Most tax-related softwares will compute that automatically. And any competent advisor worth their salt at all will not file a tax return without you making sure that you're getting benefit from this. What I see the most is even competent tax advisors and competent taxpayers who know their tax situation well are not leveraging this deduction to the best benefit that they can. So as I described earlier, there is essentially a quantifiably right outcome. And if your tax advisor isn't asking you some of the questions that I've presented today to figure out what that quantifiably right answer is, then they may be coasting on their and resting on their laurels. Don't let a competent tax advisor do that. Work with one of our tax advisors at Mullen & Associates because we are actively engaged in making sure that we're teaching you new things and that you are getting the most benefit from the type of deductions that you can possibly leverage. So to recap, the issue is what is QBI, right? The Qualified Business Income Deduction. What is it? It's essentially a 20% deduction based off of profits. Who qualifies? Almost everyone can qualify, except those in certain industries, if you're doing it right. And the key takeaway is that you need to be doing tax planning, especially towards the end of the year, once we have real numbers to go off of, to look at your profit to determine how much you're going to qualify for, and if you need to pay yourself an extra payroll to make sure to unlock more of this deduction. So hopefully you've been enlightened and learned something new in regards to the Qualified Business Income Deduction. I highly recommend that you leverage QBI if you're a business owner, if you are an independent contractor, or if you're thinking into going into business for yourself. Make sure you're getting as much benefit of this as you can. For now, this has been me, Kevin Mullen with Mullen & Associates. If you want to learn more about our company, please make sure you go to our website, mullintax.com, where we have blog posts that educate you on these various areas. In fact, this specific topic that I'm talking about in this video, we will have a lengthy blog post that gives a lot of this information again. So rather than just listening to me over and over and over again before you feel like you get it, make sure you're getting some of the visual information in reading it as well, something that you can share with other business owners that you know. So that's me signing off. Thanks so much and have a great day.